Hi candidate, welcome to another session of manifested online classes. In this session, I want us to continue with the topic of public sector accounting standards, and specifically I want us to look on a standard or a public sector accounting standard regarding the accounting, recognition, and also the measurement of the property, plant, and equipment. And specifically that standard is IPSAS number 17. So basically IPSAS number 17 is equivalent to International Accounting Standard number 16, which prescribes now the recognition, measurement, and presentation of property, plant, and equipment by what we refer as the profit oriented entities. But IPSAS 17 prescribes the accounting, the recognition, and presentation of the property, plant, and equipment by what we refer as the public sector entities. When talk about the public sector entities, you have to recall that these are those particular entities which usually specialize in terms of providing essential services to the members of the public. These entities, their objective is not to make profit. Now, under this particular standard here, that is IPSAS 17, we're going to look on something to do with the recognition, the measurement, and also the presentation of the property, plant, and equipment in the books of account and also financial statement of the public sector entities. But before we look on all those particular aspects, recognition, measurement, and presentation, first of all, we need to define the PPE, property, plant, and equipment, as defined under IPSAS 17. So we can say that PPE, that is property, plant, and equipment, that these are the tangible assets. These are tangible assets. Number one, which are held for use in production, comma, a supply of goods or services, all for administration purpose, And number two, it is expected to be used for a period of more than one financial year. Year. So that is the definition of a PP in accordance with the IPSAS 17. Any tangible assets basically means that these particular items must have physical existence, and number one, they are used in production or basically supply of goods or even provision of services or for administration purpose. And number two, these particular assets are long term. In other terms, they are expected to be used for a period which exceed one financial year. Then from there we can look on something to do with the recognition of PPE. So when talk about the recognition of PPE, according to IPSAS 17, for a public sector entity to be able to recognize any tangible non-current asset in its books of account and also in its financial statement, then such PPE has to meet two main criteria. Number one is that that item of PPE has to be controlled by the entity. Number two, its cost or basically fair value can be measured reliably, and also it is probable such that future economic benefits will flow into the entity associated with that particular asset. So therefore, you can say for an item of PPE to be recognized. Basically, to recognize is to record an item of PPE in the books of account and also in the statement of financial position. To be recognized, it must meet the following two criteria. the following two criteria. Number one, it is probable. It is probable that future economic benefits will flow into the entity associated with such assets, asset. Or in other terms, we can just say it is probable that future economic benefit now will flow into the entity and which is generated by such a financial asset. Number two, we say its cost or fair value. Its cost or fair value can be measured reliably. So if these two criteria have been met, that the cost or even the fair value of such an item of PPE can be measured reliably, and it is probable that there are some future economic benefits which will flow into to the entity and which are generated by such an asset, then you're saying such an item of PPE should be recognized in the books of account and also in the statement of financial position as an item, or basically as an asset. Then from there we can proceed and look on something to do with the initial recognition, or basically the initial measurement. What do we mean by the initial measurement? Initial measurement, you're talking of the value at which an item of PP should initially be recorded in the books of accounts of a public sector entity. According to IPSAS 17, any item of PP which has been acquired by a public sector entity should be recorded in its books of accounts in accordance, or basically it should be recorded at the cost which has been incurred plus any other related cost, So therefore, in this case, we can say that PPE are initially recognized at cost, and any other related expense incurred in bringing an asset to its intended use, and maybe also location, to its intended use and location. So therefore, all items of PP are initially supposed to be recorded or recognized at the cost now which was incurred in acquiring those particular assets, and also any related cost which is incurred in bringing an asset to its intended use and also location. Good examples of this particular cost which will be incurred in bringing an asset to its intended use and also location. These will include things like the installation cost. If, for example, a public sector entity has acquired a machine, that machine is to be installed. That is supposed to be capitalized and included as the cost of the asset. These will also include things like the delivery cost, and so on. So all these are the other associated costs which are incurred by a public sector entity in bringing now an asset to its intended use and also location. So then from there we have something to do with the subsequent measurement. And basically the subsequent measurement, now we are talking of the value at which these particular items of PP should be recorded in the statement of financial position after initial recognition, after items of PP are initially recorded in the books of account. So then at the end of each year, they should be recorded in the statement of financial position at which value. Now, according to this standard, IPSAS 17, subsequently or at the end of each year, these items can be measured by a public sector entity or can be recorded in the statement of financial position of a public sector entity using two models. We have the cost model, whereby the items of PPE will be recorded in the statement of financial position at cost minus any depreciation minus any impairment loss, and then we have the revaluation model. So therefore, in this case, we can say subsequently PPE can be measured using the following two models. So the first model is the cost model. Model, and number two, we have the revaluation model. So we have said at the cost model here, PPE or the property, plant and equipment will be recorded in the statement of a financial position at their net book value or their carrying amount, of which this particular net book value or the carrying amount, this is equal to the cost minus the accumulated depreciation minus any accumulated impairment loss. Losses. So then at the other model, which is the revaluation model, so here the items of PPE will be recorded in the statement of financial position of a public sector entity at their fair value, meaning that all items of PPE at the end of each year, they will have to be revalued by a professional valuer to their fair value. And basically, then when a public sector entity is preparing the statement of financial position, they are recorded there at their fair value. And also, it is important to note that any revaluation gain or loss, this one will be recognized as part of other comprehensive income in the statement of financial performance. In the statement of financial performance, which is prepared by what we refer as the public sector entity. So that's, or basically those are the two models which may be used by a public sector entity in terms of determining the value at which the various items of PPE should be recorded in its statement of financial position. Then from there we can look on something to do with the depreciation. First of all, when we talk about the depreciation of PPE, we are talking of the estimated loss of money value of or basically estimated loss of money value of the property, plant and equipment. Now, this particular standard here, that is IPSAS 17, it requires the public sector entity to estimate the value these items of PPE have lost at the end of each year, of which there are two methods which are recommended to be used in terms of estimating the depreciation at the end of the year. The first method is the straight line method, whereby the depreciation per annum of PPE is computed based on cost. So means that to compute the depreciation per annum, we take the cost of the PPE times the rate of depreciation. And then we have the other method, which is called the reducing balance method. And under this particular method here, the depreciation per annum of the items of PPE is computed based on the net book value or the carrying amount of the PPE times the rate of depreciation. So therefore, we have those as the two methods which are recommended for use by IPSAS 17. Then next we can look on something to do with the impairment impairment, or basically recognition of impairment. And equally, IPSAS 17 here recommends that if the recoverable amount of the PP has reduced the carrying amount, then an impairment loss should be recognized. Essentially, it is important to note that the items of PP should be recorded in the statement of financial position at the recoverable amount. The recoverable amount basically is the amount now which the entity or a public sector entity can recover or basically can get after selling the items of PP. So always the carrying amount in the statement of financial position should be equivalent to the recoverable amount. But if it happens that the recoverable amount is less than the carrying amount, then something called an impairment loss should be what? Should be recognized. Of which IPSAS 17 recommends that if there is some evidence showing that the items of PP may be impaired, then public sector entity should proceed and actually determine an impairment, the impairment loss, which is always the difference between the carrying amount and the recoverable amount, and which should then be recognized as an expense. So therefore, you can say IPSAS 17 requires public sector entities to recognize impairment loss, recognize or to requires public sector entities to carry out, let's just put it like that, to carry out impairment review if evidence exists, which shows that PPE could be impaired. PPE could be impaired. And in this case, we have said that the impairment loss will only be recognized if the carrying amount is the same with the net book value of items of PPE. If this one is basically more than the recoverable amount, Basically, remember you have said that the recoverable amount is basically the value which now, or the amount of money which a public sector entity can be able to get after selling an asset currently. So if this particular amount here is less than the carrying amount, then an impairment loss should be recognized, of which now the impairment loss, this one is computed by taking the carrying amount minus the recoverable amount, in which case we have said that this impairment loss is supposed to be recognized as what? As an expense in the statement of financial position prepared by a public sector entity. So that is the issue to do with the impairment. And then we can look on something to do with the recognition of PPE. The recognition of PPE. So what do you mean by the recognition? The recognition, first of all, is the removal of an item of PPE from the public sector entity statement of financial position. So it is the removal of a previously recognized items of PPE. So in this case, according to IPSAS 17, there are two instances when an item of PPE may be removed or may be recognized from the statement of financial position prepared by the public sector entity. So which are those particular instances? One is when an item of PPE has been disposed, or in other terms, it has been sold. And number two is when an entity do not expect to receive any future economic benefit from from an item of PPE. So therefore, you can say PPE should be recognized, when number one, they have been disposed, they have been disposed. They have been disposed. Basically, to dispose an item of PPE is like to sell, And number two, when no future economic benefits, benefits are expected from the asset. No future economic benefits are expected from the assets. No future economic benefits are expected from the asset. So those are the two instances under which now an item of PPE may be derecognized or basically can be removed from the public sector entity statement of financial position. So next, I think we can also discuss the issue to do with the disclosure requirements. Disclosure requirements. So the disclosure requirement basically refers to the information which must be disclosed as far as the items of PPE are concerned. According to IPSAS 17, a public sector entity must disclose in the financial statement and also in the notes the following information relating to items of PPE. Number one is the measurement basis. Adopted by the public sector entity. So the public sector entity will need to explain which measurement basis it is using or model it is using. Is it using the cost model or the revaluation model? Number two, the depreciation method, equally which has been used. Which method has been used in terms of determining the depreciation per annum of the various items of what? PPE. So the other information which is to be also to be disclosed is the useful life of PPE, and the other information which is also to be disclosed is the gross carrying amount. So in this case, when talk about the gross carrying amount, you're talking of the net book value. And the other information which also need to be disclosed is what we refer as the accumulated depreciation. Of PPE. And six, or final number 6, is any impairment loss. Any impairment loss which was recognized. Any impairment loss recognized during that year. So therefore, these are some of the details which a public sector entity is expected to disclose as far as items of PPE are what are concerned. So therefore, as far as IPSAS 17 is concerned, those are some of the provisions you need to know, because what you have said is that what IPSAS 17 does is basically to prescribe the accounting treatment of items of PPE to ensure that this particular, or to ensure that the measurement, the recognition, and also the presentation of the various items of PPE is appropriately done in the books of account and also the statement of financial position by what refer as the public sector entity. So once we come back in our next session, I want us to look on a certain illustration from the past papers, and equally I will also give some assignment as far as this particular subtopic is concerned. So see you in the next session.